morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, March 25th. A quiet two-sided trade overnight is starting to turn lower across the board. Corn right now is down 2 to 3 cents. Soybean prices are off 3 to 5, slightly lower in both of the products. And wheat prices have also now turned 2 to 5 cents lower. Not a lot of fresh news here this morning as we are now within a week of the USDA quarterly stocks and acreage report next Monday. Historically, this report has been tilted a little bit friendly in corn, closing higher 16 times out of the last 25 years, or 65% of the time, while closing lower 9 times. Similar story in the wheat with 14 higher closes, 10 lower closes, and 1 year actually closing unchanged. And in soybeans, pretty much a 50-50 proposition here, 12 higher closes, 13 lower. I suspect the average trade estimates will be coming out from the wire services either today or tomorrow. I see corn acres coming in just below 94 million acres, with beans just above 84 million. I suspect I'll be coming in a bit below the average trade gas in corn and slightly higher in the soybeans. I've got March 1st corn stocks at 8.105 billion bushels, almost 250 million below a year ago. I've got bean stocks pegged at 1.898 billion. That's up 53 million from last year, while wheat stocks at 1.235 would be up nearly 150 million bushels from a year ago. A number of states is now reporting winter wheat conditions. Yesterday, we saw a 1% improvement in Kansas, with 49% of the crop rated good to excellent. There's a 3% improvement in Texas, while 6% in Colorado, while conditions did dip 9% in Oklahoma to 37% good to excellent. Corn planting is also being reported. Louisiana is the leader right now at 61% of the crop in the ground. Texas at 45%, 14% in Mississippi, and 10% in Oklahoma. All are pretty much at or above their historical average. Rains this week in the U.S. will likely be heavy across the Gulf Coast and the Delta states, which will slow planting operations this week. The Midwest will see rains favor the central and eastern corn belts along with the Great Lakes region, lesser amounts for the western corn belt, and even lighter totals in both the northern and southern or southwest plains. Late season dryness in South America and southern Brazil, in fact, is leading to lower production estimates here for this year's crop. Dr. Michael Coordinator, he lowered both his corn and soybean production estimates 1 million metric tons. He's got corn now at 122 versus USDA at 126. His soybean forecast now at 169 million metric tons matches that of the USDA. Wetter and cooler conditions this week in Argentina may benefit some of the later maturing crops, however, will also slow early harvest operations. We had an inside trade in corn here overnight as many contracts consolidate very close to its 100-day moving average. Look for prices to move sideways this week ahead of next week's USDA data. And of course, fresh or new tariff headlines could certainly trigger some price volatility. Spot May beans still holding in just above this $10 level. 10 to 10.25 has been its range now for nearly 2 weeks. I think we're just coming under the weight of the South American harvest as we get a little deeper into that, in support for the March contract. If we do take out this $10 level, comes in at the March low at $9.91. New 3-week low for May meal, while oil consolidates pretty much at the midpoint of its 41 to 43 cent trading range. Wheat is also backing off a new 2-week low. Demand news is quiet while negotiations continue for a ceasefire agreement in Ukraine. Thank you for listening, everyone. I hope you have a great day.